Rents soar, helping investors, but perhaps not the federal government and definitely not the homeless. Cryptocurrencies tumble as investors shy away from risky assets, and Honda's big play to become an electric vehicle powerhouse. It's Wednesday, the 13th of April, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
And Sean, immediately after the show, you've got a really interesting chat coming up today with Tori Archbold, entrepreneur, business coach, public relations specialist. Pretty comprehensive title, that, isn't it?
Yeah, Tori's a bit of a powerhouse. She certainly is a bit of a force of nature. Really great knowledge about publicising and promoting and kind of getting the best out of yourself, really, I think is probably the best way to put it with Tori. It's a chat that I really, really enjoyed because I learnt lots of things that I hadn't really thought much about. And that's kind of where she will be really helpful to listeners, just to bring up ideas and thoughts which kind of are out there in the ether, but I've never really put parameters around them, and Tori did.
Yeah, and God, she's worked with some stars as well, which is a really good chat. So that's coming up a bit later on. But first, Sean, the main story this morning is about rents, and they've soared across capital cities over the past 12 months, growing at an annualised rate of about 12% in the cities. That's huge.
Sure is. It's great if you've got an investment property, but not so good if you're a renter. Now, remember, in the first year of the pandemic, rents fell back. But according to data group SQM Research, asking rents have jumped by as much as 21% in some capital cities over the past year. Across all capital cities, asking rents for houses are up 15%, while unit rents rose 11%. SQM said the rise reflected a growing number of people living on their own, combined with the return of international students in recent months at least, and that's all happened as supply has fallen. In fact, vacancy rates are now 1%, the lowest level in 16 years.
All right, so give us some of the details. Where are the biggest moves?
Well, the biggest jump in house rents came in Brisbane, 21% there, then Sydney at 19%, Canberra and Adelaide at 16%, and Melbourne at around 7%. In the regions where population growth has risen most quickly, annual increases are running at around 15%, and in some towns there is actually zero vacancy rates. You just can't find somewhere to live. Of course, this is great news for investors, but it really does raise the spectre of higher homelessness.
What do you reckon? Is this going to become an election issue?
Yes, it could well do, wrapped up in the whole cost of living argument. It's a bit of a problem for the government, which arguably is behind Labor in this area. We've spoken plenty about petrol prices. They've certainly come off their peaks of a couple of weeks ago, but they do remain very high. Food prices are rising. A cup of coffee is more expensive now in many cafes than it was 12 months ago. Swathes of grocery items are getting more expensive, and now the cost of shelter is rising. It's really bad timing for the government.
All right. What about local and global markets? How did they perform yesterday?
Well, the S&P ASX 200 finished down almost 0.5% to end at 7,454 points. Among the large caps, CSL, ANZ, Wesfarmers and Goodman Group, four companies from very different parts of the economy, all fell by more than 1%. James Hardie rose by more than 2%, while REA, Rio Tinto and Macquarie Group also gained ground. Many commodity prices have fallen back a bit, with Brent crude remaining below $100 a barrel. That's helped push the Aussie dollar lower, back towards 74 US cents. Overseas, all the action on Wall Street at the moment is around interest rate expectations. 24 hours ago, a Fed official said a neutral cash rate of 2.25% may have to be achieved this year to cap inflation. That would mean big interest rate hikes, and that's weighing on equities around the globe.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Anthony Albanese made his first trip to Victoria yesterday, campaigning around Melbourne, having been in Tasmania in the morning.
Yes, and Scott Morrison was in Western Sydney, including in Australia's most marginal electorate, Macquarie. It's held by Labor with a margin of just 0.2%. Now, when the Prime Minister was asked about his unpopularity, Morrison said the election wasn't a popularity contest, and he continued to highlight that Albanese didn't know the unemployment rate when asked on Monday. That has been hammered the last few days. Albanese, for his part, highlighted Labor's social justice policies, and that came to the fore after Morrison supported a push for the legal exclusion of transgender people from single-sex sports. Albo accused ScoMo of trying to sow community division. Meanwhile, the latest Roy Morgan research shows that Labor maintains a relatively healthy two-party preferred lead over the coalition of 53% to 47%, and Sportsbet has got Labor well and truly in the driver's seat. It's paying about $1.50 for Labor and about $2.45 for the coalition.
All right, Sean, you know I love talking about cryptocurrencies, and the value of some of the largest cryptos have tumbled as rising interest rates make the relatively risky digital currencies less attractive.
That's right. You almost sounded like you knew what you were talking about then, Michael.
Oh, well, I do. Just don't ask me to expand on that.
Right, no more detail. Basically, digital currencies have won over investors because of the promise of higher returns. And that's in an environment where interest rates have been really low and returns from many other financial assets, particularly bonds, have been really weak. But as interest rates rise, the option of buying a bond becomes much more attractive. As a result, cryptos have been sold off. The value of Bitcoin at one point fell nearly 8% yesterday to less than $40,000 a unit. Cardano and Avalanche both fell back sharply. Number 2 crypto, Ether, was off nearly 10% yesterday. And this is all after the massive crypto conference in Miami last week, which, from all accounts and readings, was one of the great spruiking exercises in recent memory.
Sean, you've got me intrigued. Can you go into a bit more info about the bond v crypto theory?
Yes, I think so. Look,
yes, I'm putting you on the spot here, I know, but please go on.
So risk assets are being sold off in response to the jump in bond yields. As investors price in more interest rate rises, new bond issues have to offer higher interest rates to attract investors. And bonds that are already in the market are being sold for a lower price. So an investor can now earn a 3% yield on a 10-year government bond. 3% ain't bad. It's better than inflation. It's also a very, very safe investment. You're almost guaranteed to get your money back. It makes riskier investments, such as cryptos, look less attractive because the difference in the returns between the two, bond and cryptos, has narrowed so much. Therefore, higher interest rates are working against cryptos.
If that was our lesson for today, Sean, that was a very good one, and I understood everything you said. So thank you for expanding with very little notice on that one.
Thank you.
Now, moving on to a story we've talked about before, Sean, fund manager Pendle Group has rejected the $2.4 billion takeover bid from rival Perpetual.
Yes, the Pendle board said the bid significantly undervalued the business. No surprises there. We expected that. And I dare say, though, this battle ain't over yet. Pendle said the offer represented a nil premium on a 180-day weighted average price. True, though it was a 40% premium to the closing price before the bid. Now, Pendle also announced yesterday a $100 million share buyback. By the close of business, both Pendle and Perpetual's share prices were both down a touch. I reckon there's more on this one.
Sean, some fantastic figures in this story, and it's great if you're a bit of a voyeur and like to know what people are earning. Big consulting and accounting group PwC Australia has gone to great lengths, it seems, to hire and retain staff.
Yes, this was in the media yesterday. It just seems that PwC have had to admit how much they pay people to demonstrate that they are competitive and in the market. Now, there's undoubtedly a shortage of financial experts around the place at the moment, and PwC, in an effort to improve their competitiveness and retain staff, disclosed pay ranges. Quite incredible, really. Directors are able to earn up to $362,000 a year. That's according to the Financial Review. And partners are expected to bring in between $340,000 and $3.7 million in income, as in attract that amount of business.
There we go. All right, Sean, you knew it was coming. It was always going to be in today, but we have another Star update, and the inquiry into whether Star Entertainment is fit to hold a gaming license yesterday accused the gaming group of using legal privilege to shield from Austrac a report outlining money laundering risks at the group's Sydney casino.
Yes, and the top lawyer in the business conceded that the privilege claim was an error. The inquiry will now call Star's top executives, including Chair and Acting Chief Executive John O'Neill, and most of its board, the inquiry initially focused on middle management. It was supposed to run for about 5 days. It's blown out to at least 7 weeks, now includes the board members appearing, and has the scalp of former CEO Matt Beckier, who of course stepped down late last month. Much more coming on that one.
Yeah, there certainly is. Okay, now Afterpay said, I find this quite staggering. Afterpay, Sean, said it made a half-year loss of $346 million in the 6 months to December. That is massive.
Sure is. It was about 4 times the level of 12 months earlier. Mostly it was because of ballooning costs around marketing particularly. Now, Afterpay, of course, is now owned by US payments giant Square, so there's not a share price for it to affect too much. And in fact, Square's share price was flat after the announcement. The part of the result, though, which I think could cause some heartache, is the bad debt levels. This has been a contentious issue for buy now, pay later groups ever since they arrived in the scene. Afterpay's debts more than doubled to $177 million US. The news won't help the sector. In fact, the share price of Zipco, the number 2 player in the local market, fell almost 6% yesterday, in large part because of that bad debt number from Afterpay. It's a really interesting stage for the buy now, pay later players.
It's a fascinating sector, isn't it? And it's been really interesting watching what's happened over the last couple of years. And if you were to compare where the industry is now with where it was about kind of 12 months ago or 2 years ago, it's virtually unrecognisable. It's so different.
Yeah, and Zipco's share price is down 80%. The guys from Afterpay, remember, sold out at about 30% below its peak. Now, perhaps they understood what was coming. Certainly just doesn't seem to be as valuable a sector as we were talking about 12 to 24 months ago.
Yeah, that's right. Okay, moving on, Sean. Some changes to COVID restrictions in South Australia worth mentioning.
Yes, that state's been hit hard in recent months, but from Friday, people won't have to wear masks in most indoor settings. Good news. South Australia recorded another 4,400 cases yesterday. Queensland recorded almost 8,000 cases. In Western Australia, there were more than 6,300 cases. And in Tasmania, there were more than 2,000 cases. Now, the Victorian government has followed the lead of New South Wales and the wishes of Qantas boss Alan Joyce and made airline and airport workers exempt from close contact isolation rules. That allows them to go to work and hopefully alleviate some of those horrendous lines we've been seeing at the airports. Victoria recorded 10,300 infections yesterday, while New South Wales recorded over 15,000 cases.
Just a few quick stories to rip through, Sean. Childcare operator G8 Education is cutting back office jobs and its marketing spend as well.
Yes, the Gold Coast-based operation said earnings have been hit hard by the pandemic and recent flooding.
The weekly ANZ Roy Morgan survey of consumer confidence gained 1.3% last week.
Yeah, some good news. That was in response to falling petrol prices, although inflation expectations were unchanged.
All right, moving on to overseas news, Sean, and this is just really quite confronting. Every day, the details coming out of Ukraine are really awful, and the horrific stories just continue to pile up.
Yes, there was a particularly disturbing one yesterday with war crime investigators uncovering sexual violence committed by Russian troops in Ukraine. In one case, women and girls were kept in a basement for 25 days, and when discovered, 9 of them were pregnant. Last week, Russia, of course, became just the second ever nation to be suspended from the United Nations Human Rights Council. Just such disturbing stories.
Yeah, that's right. Now, Sean, Honda, we mentioned this one at the start of the show. Honda said it's going to spend $40 billion to shift towards electric vehicles over the next decade.
Yes, that's right. Honda was once a global leader in innovation, but it's really lost its place and fallen behind many of the other big manufacturers in the electric vehicle market particularly. It's Japan's second largest car maker, and it said it will launch 30 electric vehicle models by 2030 and produce over 2 million EVs a year. Now, at the moment, it has just one EV. Of course, companies like Tesla have really stolen a march on all the big Japanese groups, Toyota, Honda, etc. Those groups, including Honda, hope to phase out the selling of petrol and diesel cars. In Honda's case, he wants to do that by 2040.
I once drove for many years, in fact, a little black Honda Civic. I love that car. I can't imagine that ever being electric.
Well, it's going to get there. In fact, I think at some point we're all going to be driving electric vehicles.
The car dealer tried to talk me out of it. He told me that I wasn't allowed to drive a Honda Civic because that was a hairdresser's car. Not that there's anything wrong with that.
It's very harsh on everyone, hairdressers and Honda Civics.
It absolutely was. Yeah, Honda Civics are great little cars. Anyway, we are digressing significantly, and we've actually come to the end of the show because up next, Sean, is the Fear and Greed Daily interview, and today you are speaking with Tori Archbold.
Yes, Tori, as we mentioned at the top of the show, is a bit of a force of nature in herself. Fantastic chat about how to get out there and publicise yourself, promote yourself in a way that's value add rather than just shouting from the rooftops.
Yeah, it kind of goes beyond corporate branding into personal branding, really, and how best to do that. I found it really interesting. So stick around for that one. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 13th of April, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.